Hey folks, see Rachana Ranade here and I welcome you all to a very interesting video wherein we are going to do fundamental analysis of a stock which rose by 38.35% because of the budget 2021 announcements. It rose by 82.7% on the backdrop of budget 2022. Now, I'm sure everyone will be like, what about budget 2023? Exactly, that's what we are going to discuss in today's video. But before I reveal the name of the stock, let me give a quick shout out to these two people for their wonderful comments. Their names are Nikhil and Shibani. Thanks a lot for motivating me. And the name of the company is GNFC, that is Gujarat Narmada Valley Fertilizers Company Limited. Well, this company is a joint sector enterprise which is promoted by two entities. The very first one is Gujarat State Investments Limited or GSIL, which holds 21.38% in the company, and it is also jointly promoted by Gujarat State Fertilizers and Chemicals Limited, which is GSFC, and it holds 19.8% in this company. This company was started in or it was set up in Bharuch way back in 1976, but its manufacturing and marketing operations started in 1982. Now that you know some basic points about the company, let's also try and understand the various business segments of the company. And for that, have a look at this chart. You can very clearly see that GNFC has three major segments. Basically they manufacture and trade in what? Fertilizers, which gives them or which generates almost 29.61% of their total revenue. The second segment is that they manufacture bulk chemicals, which contributes to 69.37% of their revenue. And the last one is a very minor chunk, which is about IT, and it contributes barely 1% to the total revenue of the company. Now that we know that the company is mainly into three business segments, let's try and dig down deep into each and every business segment. The first one would be fertilizer segment. For that, have a look at this chart. You can very clearly see, like we discussed earlier, they are into even manufacturing as well as trading. What are they manufacturing? They are manufacturing various fertilizers like urea and ammonium nitrophosphate, and they are selling them under the brand name Narmada. They are also into trading of various fertilizers like DAP, MOP, SSP, ammonium sulfate, and city compost. Okay. Other than all these things, they are also making products which are used directly by an end customer. Something like what? Something like a face wash, hand sanitizer, or even if I'm talking about shampoos, they are manufacturing and selling this under the GNFC Neem project. All in all, I can say, just for your additional information, fertilizers are used for what? They are mainly going to be used so that the overall fertility of the soil increases and overall growth of the plant also increases. If I were to talk about the fertilizer industry in India, giving you some stats on that, you can see here that as on 2022, the market size or the market value of Indian fertilizers industry as a whole is at 898.5 billion rupees, and which is approximately 2% of India's GDP. This is set to grow to 1188.3 billion rupees by end of 2028 with a CAGR of 4.5%. Now you can understand that with the rising population of India, don't you think that the demand for fertilizers is anyways going to grow? Answer is obviously yes. But not only population, if you have a look at this chart, you will be able to see that the urban population is also continuously rising. Now you might be like, what is the relevance of urban population? Logic is very simple. With more and more urban population, the cultivable land is going to decrease. There are going to be more IT parks and all that encroaching into all these lands, and that is the reason why more and more crop will be expected from lesser and lesser land. And with this, the demand for what? Demand for fertilizers is again going to increase. I'll also give you an important data point which mentions that whatever is the requirement of fertilizers, out of that, India imports 30%. And if that is a huge amount, is what you feel, if of course that is a big amount, then I feel that there's a big headroom left for the existing players in India. Let's move ahead with the next segment, that is the chemical segment. And for that, let's understand some basic data points first. In 2019, you can see that the Indian chemicals market stood at $178 billion, and it is forecasted to reach $304 billion by 2025. India is the sixth largest producer of chemicals, but I'm sure you might be like, chemicals as an industry, does it have any subparts or it's just like chemicals, full stop? No, it has subparts. It looks something like this. Chemical industry can be further broken down into something like bulk chemicals, specialty chemicals, petrochemicals, agrochemicals, fertilizers. Others may aega biotech, pharma, API, and a lot more. Okay. But out of these, what does this company focus more on? They focus more on manufacturing of bulk chemicals. Now, what are these bulk chemicals used for? They are mainly used as a raw material for various specialty chemicals. Okay, so they are going to be used as a raw material for manufacture of various specialty chemicals. But you might be like, where are they used? For that, have a look at this chart. You will understand that, oh my god, we are surrounded by GNFC products, not directly, of course, indirectly, but almost 24 by 7. The various chemicals that they manufacture are used in making medicines or mattresses, furniture, interiors, perfumes, shoes, clothes, and whatnot. And as we discussed before, they are also used for food grain produced using fertilizers, which is the usage for urea. Now let's quickly wrap up the third segment, that is the IT segment. Here you can see what all products or services they offer. Out of these, I'm sure you are aware about something like CCTV, digital signature, and data center. We are not going to waste a lot of time on this. Reason is simple, they contribute barely 1% to the revenue to the company. With this, I hope you have understood the three major segments. One was fertilizers, one was chemicals, and the third one was IT. If you want to learn more about how to do fundamental analysis of various companies, for that we have a separate course on our website www.rachanaranade.com. And also, I hope you're aware about our pro investor membership, yearly membership, wherein you can get an access to detailed analysis of more than 40 listed companies. So for that also, don't forget to check out our website, and if you want, you can use that special coupon code as well. Now let's have a look at the financials of the company, and for that, let's go on to screener.in. Here we have Gujarat Narmada Valley Fertilizers and Chemicals Limited, and here you can see that the market cap is just 8,920 crores. So warning, this is a small cap company. Okay, and the moment it's a small cap company, risk is ideally on a shade higher side. Now, if you see your all in all basic or major ratios, ROE at 24.5%, ROCE at 33.1%, the industry PE is 14.6, but stock PE is just 4.47. The P to BV is also just 1.06. So, all in all, valuation parameters look good for the company. Even debt to equity is zero because they don't have any debt right now. So, that also looks good. If I were to go on to the PE ratio versus EPS, here you can see some interesting relation in this. So here you can see that the EPS is continuously rising. Just one last quarter, you can see a little bit of dip, but PE is continuously going down. It means that there is a chance that the price might catch up with the EPS of the company. Now, if you want to see here, as per screener, there are only pros, not cons. But for that, have a look at this. There's very clearly mentions that the pros and cons are machine generated. So don't feel that this company has no disadvantages or no cons. If I were to go on directly to the yearly or the final P&L of the company, you can see that the sales TTM is at an all-time high at 10,435 crores. Operating profit margin also looks fair enough at 25%. Of course, last year's, that is 2022, ka OPM was at 28%. So it will be interesting to watch the Q3 as well as Q4 results. PBT is almost again at an all-time high for TTM as well, and net profit is also at an all-time high. We did talk about ROE, we did talk about the overall growth as well. Sales growth is good, compounded profit growth is good, stock price CAGR is also not bad at all. The point about borrowings, we said it's very negligible, debt to equity. So, upper it was given 0, it might be 0.00 something. So, almost negligible with just 8 CR of borrowings. And here also we'll have to check whether it's a long term. No, it's not a long term borrowing. So, that might be the reason why for debt to equity ratio being 0. Even if you have a look at one more very important point, which is the cash conversion cycle, you can see that it has gone down from 103 days to just 60 days. So, this is also a positive point for the company. If you have a look at the shareholding pattern, you can see that promoters holding is constant at 41.18%. FII's holding has dropped a little bit, almost by 2%, but this has been covered up by public, wherein their holdings has increased from 31% to 33%. This is about the key highlights about the financials, but what about the technicals for this? So for that, let me just zoom into the chart for GNFC, and we just close the pivot. Okay, this gives us a cleaner picture. And if you were to observe this, so this was the recent high for the company, and we would want to draw a trend line from here. So here you can see the company is into more of higher highs or lower highs formation. Answer is about lower highs. Okay, I have not joined it very nicely. Okay, so this is rough joining points, and here you can also see the lower band is somewhere here, and it's very clearly visible that the stock is in this channel. Now it will be interesting to see whether the channel is broken on the upper side or on the lower side. But right now, as of now, I feel its lower side seems around 500 and upper side seems around 650ish. But what about pivot levels? For pivot levels, you can see that 560 ideally should act as a strong support for the stock. If this is broken, then what? So for that, we should go to the 1 week chart, and I would just quickly remove the pivot points and these two drawings as well. And here, if I were to now see, I'll just zoom out the picture here. Okay, this was a recent high, after which the stock tanked quite a bit. It was taken out, it went up straight high, and now it is trying to retrace to this level. So if I were to check this level, it comes to 550. Okay, so if you were to ask me 550, does this sound like a good support? Answer is yes. And if you remember, for the daily chart also, the pivot, I'm going to again switch that on, pivot is around 560 level. So as per weekly candle or even as per daily pivot, 550 looks to be a strong support. Well, now that we know about the fundamentals and technicals of the company, let's try and focus on some positive points and certain risk factors involved. Let's kickstart with positives first. With a vision to become a global powerhouse, the company is focusing more on capacity expansions. If you have a look at this, you'll be able to see that they are expanding the capacity of ammonia, of weak nitric acid, and of ammonium nitrate melt by all these metric ton per annum. And the total capex is estimated to be around 1,350 crores, which is going to be commercialized by 2025-26. They are also planning to do more capex on what? On green hydrogen with renewable power capacities, and for this the estimated outlay is around 2900 crores. Now with the FATA and positives, we have to understand that there are certain risks also which are involved here. The very first could be fierce competition from dominant foreign suppliers. You might be like, why, where do foreign suppliers come into play? If you remember, we said that 30% of our total requirement is met by what? Imports. And if foreign players have deep pockets, they can definitely disrupt this entire industry. So this could be a fierce competition and it could be a risk to the company. Second one could be the subsidies and the raw material cost mismatch. So typically what happens is that government declares XYZ rupees as subsidy per kg, let us say. Currently it is okay, it is fitting into the equation, but assume that after 2 or 3 months the raw material costs are pushed up. Now, the subsidy amount might be lower as compared to the raw material cost, and with this, the profitability of the company can get hampered. The third one is that 65% of the fertilizer revenue is coming only from Gujarat. So, this is like a concentration related point. And finally, fertilizer business, of course, it's dependent on agriculture, on monsoon. So, any adverse impact on this might have a negative impact on the business. Now, before we conclude today's video, let's try and understand what could be the expectations from this budget about the fertilizers and chemical space. If I were to talk about November 2022, the Minister of Chemicals and Fertilizers, Mr. Mansukh Mandviya, said that due to the higher global prices, India's fertilizer subsidy bill for 2023 would rise to a record high of 2,25,000 crores, and this would be up from the previous year's budget, which was only 1,50,000 crore rupees. So that could be a significant jump. Now you only imagine that if subsidies are going to be higher, is that going to be a good or a bad sign for the company? Obviously, it's going to be a good sign for the company. Second one, government may also increase the urea subsidy from 268 rupees per kg to 288 rupees per kg. Again, a positive sign for the company. And finally, PM Narendra Modi is also being more vocal about chemical-free fertilizers or chemical-free farming or natural farming. He is planning to come up with PM Pranam Yojana, and it is expected that it will be launched soon, where we can expect some announcements about in the budget regarding the R&D and innovations in this sector. Well, I hope you enjoyed the fundamental analysis of GNFC, and I would request everyone to share your analysis, one positive point, one negative point for the company in the comment section below. If you want to know more about top 3 stocks from the defense sector, you can click here. And if you want to know more about top 2 stocks on my radar for 2023, you can click here. Till then, take care. Jai Hind and bye-bye.